Okay, well, thank you so much, and welcome everyone, and welcome to those joining us online. Really glad our two virtual speakers are with us. We had, again, some technical issues getting them in, but they're both here, so we're really glad to see both of you. And yeah, even though this is called the panel of experts, we really know that all of you are experts. And so we're just like a small sampling, having a small conversation with a group of friends up here is the way I'm looking at it. So really glad to take a moment to have all of our panelists introduce each other, introduce themselves. And so Simeon, we're gonna start with you. We'll go to our online panelists first and then to those who are here in the room. So Simeon.
Excellent. Well, thank you so much. Really pleased to be with you. I think I'm hearing an echo, but if someone could just give me a thumbs up that you can hear me, that would be great. Yeah, excellent. Well, yeah, thank you so much for, I'm really pleased to be with you at the conference today. I am Simeon, yes, the Chief Community Officer at American Eagle Financial Credit Union. New to the role, the organization has been together for 90 years. And this year they added Chief Community Officer to the senior team. So new to this space. The organization, it's a state chartered credit union. We have about 160,000 member owners, 2.5 billion in assets, and a real strong consumer product and service base. So we do not do business lending. And yeah, that's kind of where I wanted to just frame up where the organization was. Really glad to be with you. We're really leaning into member well-being as a real focus for our work in continuing to be relevant to the community, relevant as a financial institution in the state of Connecticut for the long term. We're seeing that the local community is the place to really be invested in and really be connected to as we lean into the long-term vision for cooperative finance. Great, the slide's up now, so I can speak a little bit to that if we're diving in there. You'll see, our mission is really about enriching the lives of our members to create this world where financial freedom is a reality. And the vision is to be that vital resource to uplift communities to achieve security, emotional well-being, and financial independence. So the next set of boxes there is really what I started with, which is who we are. And then on the right is how we're really looking into achieve that through community impact and through a sustainable mindset over the long term. Starting with basic needs, really understanding that if people's basic needs are met, then they're able to move on to the next stage of their own sustainability, and looking at then supporting the knowledge and opportunity, particularly around financial understanding and opportunity around what that can be, whether it's entrepreneurship or mentorship or training and education for career. And the last one is around member well-being. We're really digging into the lived experience of what it's like and how we as a credit union can help support our members beyond just the technical knowledge of finance and supporting their day-to-day financial needs to how do you approach the management of personal finance, the management of career building, the management of building wealth for your family or building sustainability for your family from a experiential and mindset approach as well. So that's just an overview of where we are, and I'm looking forward to discussing kind of as we dig into member well-being and the pieces as we move into delivery throughout the rest of the panel. So passing it on.
Great, thank you so much. And Rodrigo, we'll turn it to you to introduce yourself and your organization.
Okay, thank you. It's a great pleasure to be here. My name is Rodrigo Henriques. I'm the Chief Innovation Strategy Officer at the National Federation of the Central Bank of Brazil Employees Associations. It's kind of a long name, right? What we do is we work closely with the Central Bank of Brazil and other regulators, such as the Brazilian Securities and Exchange Commission, to foster innovation in the financial system. And we've been working very closely with credit unions and financial cooperatives in Brazil. We have this huge project here called Recipe. Is the recognition of innovation with purpose, that we recognize these purpose-driven innovations with the financial cooperatives in Brazil and help them develop their innovation management. And we have this acceleration program called Next Impact that we've been working with Sicredi. You just saw Sicredi on the last video. And we try to accelerate social and environmental impact initiatives with the sector. So that's what we have been doing in Brazil for the last 10 years.
Wonderful, thank you. And we're so glad you could be with us from Brazil today. And turning to those in the room, Alison, would you like to go ahead and introduce yourself and your organization?
Thanks, Susan. Hi, everyone. I'm Alison. I'm the Director of Climate Strategy and Performance at Vancity. You heard from our CEO this morning, so you know a bit about Vancity already. But I'll provide just a little bit of additional information to kind of ground the conversation today. So as Wellington mentioned, we were formed just about 80 years ago by a group of change makers, but now we have about 570,000 members, served by over 50 branches, and we're based primarily on the west coast of Canada, the lands of the Coast Salish people. But we also do have a bank actually based out of Toronto, and as Wellington mentioned this morning, some big plans around going national. We are a values-based financial institution, and we really use our assets to increase financial well-being and environmental well-being. And when it comes to driving impact, we have what we call our impact pie. So we have 4 focus areas: climate, equity and reconciliation, affordable housing, and cooperatives and community. And so that's where we really ground our impact work, and we work to embed impact across our organization, driving it through our day-to-day business, as well as how we deploy a portion of our profits.
That's great, thank you. And David?
Yes, thank you, Susan, and thank you to my fellow panelists. My name is David Honick. I am the Senior Global Sustainability and Climate Manager at UNFCU. So I work at a variety of things. The first is on UIS, and I'm very glad to see all of you in person and virtually here today. I've had also a really nice time working with the team on this initiative. In addition to UIS, I also work quite a bit on our impact report, so communicating all of the great work that UNFCU is doing around a variety of environmental and social topics. And then I also work as a subject matter expert for environmental and social initiatives that we're considering, such as climate risk. Thank you.
That's great, thank you. And welcome again to our panelists. As you heard, I'm Susan Hendershot. I serve as the Director of Climate Community Engagement for Self-Help Climate Capital. And Self-Help has a family of organizations, including a state credit union and a federal credit union serving 10 states in the US, as well as a nonprofit loan fund under which the Climate Capital team sits, and also a research and advocacy arm. So we're pretty busy, actually, right now in the US. So I want to dive right into our questions because I know our time goes really quickly, and we want to save some time for audience questions at the end as well. So I want to start with a key question. I'm going to direct this to Alison and then David. And that question is, how can credit unions leverage the credit union difference during these challenging times and weave sustainability into their practices? So Alison, let's go to you first.
Sure, thanks. I love this question because I'm fairly new, relatively speaking, to the credit union sector. So I spent many years at a large bank. It was great and a great experience, and I learned a lot working in sustainability there. But I think what I observed coming into a credit union was that you have such a head start at credit unions. They were started in the very beginning to address fundamental issues of inequality, right, and lack of wealth building. And they continue to come into existence and continue to exist to try and improve people's life, to distribute wealth differently, to address societal challenges and problems. So you already have such a head start at a credit union. And so I think what I would say is kind of, if you're looking to accelerate sustainability or go further with it in your organization, have a really good understanding of like, why was your credit union founded? What difference is it trying to make now, or was it trying to make? And how can that be dialed up to address sustainability challenges? How can you maybe think more broadly about challenges that your members are experiencing, and therefore what your organization can do to help address those? So I think, yeah, just leaning into that foundation, to the values, to why you exist. And I think that we're also much closer to our members, right? They are a part of our organization. And so doing a good job of seeking to understand what's going on for them and how you might work with them to change that and engaging them through that is much more straightforward at a credit union. And the last thing I would say is credit unions are really good at unconventional approaches. We're willing to think about things differently. I think Wellington mentioned it this morning, like it's real at Vancity, and I think it's probably real at many of your organizations as well. We're willing to just come at things from completely different perspectives, to shift the formulas that we use, to think about it in different ways. There's just a lot more innovative thinking in the credit union sector in that space. And so again, lean into that, lean into your colleagues' expertise around you, and that willingness to approach things in a different way.
Yeah, leaning into your colleagues' expertise, I really like that. And the example from earlier about your very large team meetings comes into play here, I think, too. So David, let's turn to you, and same question.
Yeah, absolutely. And, I couldn't agree with you more. But when I was thinking about this, I thought, well, what is the credit union difference? And I think it starts with principles. What are the principles of the cooperatives? And these are institutions that are member-owned, community-focused, and really designed for the long term. And that is the environment really that fosters sustainability. And then sustainability, it cuts the other way back the other way. Sustainability is long-term in nature. That's where the payoff is, and it's community focused, and then it's going to benefit your members. So making sustainability core to your business is really something that credit unions should do to differentiate themselves. And then finally, what I wanted to mention is collaboration. We, as credit unions, are different than other financial institutions in that we're not necessarily competing with one another, so we can collaborate, we can share best practices and learn from each other, and we can attend events such as UIS to do so.
That's great, and that collaboration can really go both externally to the partners that we're all working with outside of our organizations, but also internally, right, across teams, across lines of service that we have, and so just looking at all the different ways that we can collaborate with one another, I think that's a really great point of view. So thanks so much. And Rodrigo, I want to bring you into the conversation now. So speaking of collaboration, you've seen just some great collaboration among cooperatives, accelerators, and institutional platforms to enhance economic and environmental resilience. And so I wondered if you could share with us just one or two takeaway lessons from those experiences that you've had.
Oh, thanks for the question. As I said, we've been running the largest acceleration program in the Brazilian financial sector called Next. We had more than 200 startups, fintechs being accelerated in Brazil with the help of the regulators here. And for the last 3 years, we did a specialized branch of this program called Next Impact that's dedicated to social environment impact, connecting startups with strategic institutional partners to develop solutions that generate long-term social and environment and economic value. So what is it? To give you guys an example, last year with Secret, we partnered with a startup called InvestPlay. This is a Brazilian data intelligence startup that specializes in financial analytics and open finance solutions. So together they developed a pilot project to automate the collection, processing, integration of energy efficiency data for vehicles like cars and trucks that were financed by Secret. So the goal was to improve the accuracy of greenhouse gas emissions calculations for that vehicles that Secret was giving credit for, and align this practice with international standards such as the Partnerships for Carbon Accounting Financials. So they did this kind of cross-section partnership. They used another company in Brazil called Ecofinance Business that they consolidated like 16 years of official efficient data from Brazil's in Metro. It's like a standard body of governance, and that created a proprietary algorithm to map that financed vehicles with their respective energy performance records. So there's the broader lesson for us is a kind of global community. So we have to put cross-sector collaboration involving multiple agents, the regulators, the credit unions, startups, combining their intelligence and being willing to act to increase this systemic resilience of the financial sector in Brazil. What we have to do, everything we do here in the financial sector has to do data-driven solutions, and to make sure that this is transparent to every partner, every financial agent. So consolidating this historical data and leveraging AI properties to improve the reporting and the decision making was very important for us. And scalability is kind of key, right? So we had to pilot to create these models that can be replicated across networks and geographies in Brazil. So that's the key lesson for us with this kind of program.
Oh, that's great. And I'm thinking about that global scale, but also the local impact that work has. And that's a great lead in for our question to Simeon as well. So Simeon, your role at American Eagle Financial focuses on community impact. And so I wondered if you could tell us how a credit union becomes the anchor in a community and grows social purpose. And, you know, if you could give us a practical example and maybe some of the challenges that you've had to overcome in order to see that through.
Sure. Well, I love the idea of, we are working to become anchors in our communities. I think I love the example that Rodrigoh gave of the network effect that he's working in Brazil to create, yet and similar with Alison and David in the examples you shared, we're all seeing how we can root into the communities we're serving while being part of a larger movement, right? And really collaboration across the credit union space. how we're doing it at American Eagle to become rooted in community is really, I'll go back to the credit union way, right? That was discussed earlier. It's really through participation. By being a member-owned credit union, it's all through participation. We exist because groups of people came together to do things together that they couldn't do individually. So the more we can have our members participate in the things that we're doing, the more rooted we become in community. I'll say with the work we're doing to help educate around financial education, financial freedom, a lot of that work is happening within the educational system. So we have a partnership with our local league around a tool that we use called a financial reality fair, where we have an app that people can use to download to have sort of a virtual experience of what it's like to go through their couple months of having an income and having expenses and going through that. So we gather 800 students at a time in a stadium to go through this experience all together. And they go through and see what it's like to choose what kind of food budget they want to have, what kind of car they want to drive, what kind of entertainment they want to have, so on and so forth. And then at the end, they go talk with a financial counselor to see how they did and what their experience was. And at the end of that, many of them, have that first experience of like, oh, my decisions have consequence. And so starting that and having that experience at a young age is one of the ways that we're really rooting in with the community. We're seeking to expand that beyond our high school population into working with universities. We've done a few with our local community colleges, and we're looking to go even further than that to really have those experiences drive awareness and then hunger for more knowledge, and then be able to have more range to make choices as they're moving forward in their lives. In terms of challenges, I think, it's always, I think, in this day and age when there's so much information coming at us all the time from all different perspectives and all different places, it's difficult to parse out the signal from the noise around what communities really need. And also, as an individual level, when we're speaking to students or others, helping them parse the signal from the noise in terms of how they think about the long term for their growth, development, building for the long term. And so it takes a time to slow down, take a breath, have these experiences where you can kind of peel away the layers and come to that that aha moment, and then see how long you can move that into the future. Other challenges, I think, are just, we're in a really dynamic and difficult environment right now. So it's trying to root down to those basics with our members and engage with them on the day to day.
Yeah, that's great. And I hear you making that effort to create that feedback loop that you need in order to know, as you said, what the community really needs, and are you meeting the consumer's needs or your members' needs? And I think that's why probably so many of our organizations in the room have community engagement staff that are really reaching out into the communities to create that feedback loop and ensure that we are meeting the needs of our members and the communities that we serve. So that's great. And Alison, I want to turn to you because Vancity's vision is a transformed economy that protects the earth and guarantees equity for all, which I think is just beautiful. And I'm just curious how your organization is realizing its vision, and what are some of the challenges and opportunities with which you are faced?
It's a pretty big vision, yeah. I mean, I find it hugely motivating, but also that's a big change to affect in the world, right? And I think Wellington touched on this morning, like from when we set that to now, it feels like it's become harder to realize that, and it feels like a lot of the things that we're talking about within that around climate change, wealth inequality, like that, those are only, not going in the right direction. But as we also touched on, like we're not stopping. And in this moment, it's ever more important for us to be continuing to do that work and to lean into that work and provide an alternative, right, to what's out there, provide that hope, provide that optimism. So when it comes to Vancity working to progress against that vision, we focus our work in those areas I talked about earlier, so climate, affordable housing, equity and reconciliation, and cooperatives and community. And those are areas where we've heard from our members that they are important to them, and they're areas where we are able to have some really big impact, right? That'll align with sort of how we do business and the products and services that we offer. So we have initiatives across those different 4 areas, but I'm just going to talk about kind of 2 buckets, and then I'll get into challenges. So one of the ways that we are affecting change is actually around our products and offers. So we seek to, as we offer products, I think about like how can we actually embed impact within those products themselves and deliver positive outcomes. So one example that we've got is we relaunched our mortgage cashback this year. Pretty standard offer in the industry. You bring your mortgage to us, you're going to get a cashback, right? Thank you for bringing your business to us, reward. But what we built into that cashback was a couple additional tiers. So if you were a first-time home buyer, you get an additional cashback from us. We want to encourage people and support them onto that, first rung of home ownership. And then we also are offering an additional cashback if you bring us a low emission home. So if your home doesn't use fossil fuels for heating, for hot water, which primarily in British Columbia where we operate means you're using green electricity, you get an additional bonus for that. So we try and think about our products really creatively, our offers really creatively, and like how can we incorporate impact into that. We have specialized products. We do planet-wise lending if you want to lower the emissions of your business, your home, your vehicle. We have a different kind of mortgage where you could buy a property with your friends or other people that you know, and be able to get into home ownership maybe in a different way. We are seeing increasingly people want to have maybe multi-generational living, and what does that look like? And so we offer specialist lending to convert into a multiplex. And there's many more, but just to say, like, think about how we really think about, like, how do we actually take those products that we offer, the perks that we offer, and put impact into them. And then once we actually generate profit from those, then we take quite a significant portion of that and deploy that towards those impact focus areas. So Vancity takes 30% of our profits and returns those back to members and community. And we use those to invest in programs like our Housing Accelerator program for affordable housing, our nonprofit housing retrofit program, and many others. So it's quite a significant chunk of profit, and we really don't take that lightly, right? Because that means that might not be money you're investing back in the organization, but we do feel like in the end it does that because we're investing it back in the communities where we're operating, and that ultimately serves to ensure our members and the communities we operate in are healthier than maybe they would be otherwise. In terms of challenges, I mean, those impact focus areas that I touch on, like even just one of them, affordable housing or climate, is massive. The challenges in it have come about over very long periods of time as a result of many sort of thorny challenges. And what that means is when you're saying, we're gonna work on affordable housing or we're gonna work on climate changes, that can send you off in all different directions. And we've definitely found that there's some merit in having some focus within that. And so it's a continual process for us in terms of, are we focusing within those areas, like in the right places, in ways that really are going to improve our members' lives, the communities we operate in. And so, and you can, you get a bit of creep, right? And then you kind of gotta like draw it back in terms of being really focused. And then I'll just maybe circle back to the beginning of my answer, which is the other challenge is it's become increasingly difficult, and we're trying to do this work in a space that where we've seen the commitment to action reduce. We've seen policy not move as quickly or in the direction that we want. And so that makes the work in front of us just that much bigger in terms of delivering outcomes.
Yeah, for sure. I think we're all feeling that right now as well. So thanks for identifying that as a real challenge. But the work that you're talking about is just so impressive in terms of its mission alignment, and just really glad to hear those examples. And now I'm going to separately go look up all the green work that Vancity's doing and see how we can incorporate some of what you're doing with our team.
Climate report, so to feel free.
Right, exactly. So David, this actually comfortably gets us to our next question, which is how is UNFCU supporting the business case for sustainability, and what data should credit unions be looking at, and how can they measure success?
Yeah, so in terms of the business case, I'll start there. UNFCU is unique. Our sponsor is the United Nations, and this is an organization that developed the sustainability goals. So for us, it's really imperative that we show that we are aligned with our members' principles and values. But even if that were not the case, I think we'd still see quite a lot of value in sustainability and a business case for it. More and more, we're seeing that good sustainability practices are good business practices. There's not much of a difference. If you look at opportunities, we've seen quite a few in terms of cost saving with a variety of initiatives related to energy reduction as well as paper reduction. And then on the revenue side, there are products that we are bringing to market, such as electric vehicle financing. So definitely there are opportunities. And then there is also quite a bit of room for risk reduction. We're starting to look much more at how we have been looking at, and we're continuing to look, I should say, at how climate risk could potentially impact our portfolio of mortgages. We've conducted a scenario analysis and are strategizing as to how we can address that risk. And then finally, I want to mention employee attraction and retention. I think that sustainability for us is definitely a tool by which we can go out and find the best talent and then make sure that they stay with UNFCU. We have the Global Sustainability Team, which really helps to foster engagement in a variety of sustainability initiatives at our organization. And with respect to how we can measure it, we have a variety of KPIs that we measure both on the operational side as well as the impact side that we continuously review and make sure, see how we're progressing on those. And I'll also just mention that we're in the process of looking at our materiality again, both from an impact perspective as well as a financial perspective, and making sure that we understand what is at the forefront in terms of the sustainable topics that are material for our organization. We have the right initiatives in place to align with those material topics, and then we have the infrastructure to collect that data and measure how we're doing against those top material topics.
That's great. And I know, similar to, I think, what you're saying, we're looking at self-help about, how is sustainability and climate sort of a through line in everything we do. So it's not only internal to, the organization. We have a clean energy plan. We're advancing that, but also, how are we training our staff to think about sustainability? What products are we offering to our members that are loans for renewable energy, energy efficiency projects, same thing on the commercial lending team. So really thinking about it more holistically, which I think, all of our panelists are talking about today, instead of just sort of siloed out as sort of a vanity piece over here that we're working on. So really great to hear these examples. And so I want to turn back to you, Rodrigo, because I know we're all curious about financial cooperatives in Brazil. At least I know I am. And the question is really about how those cooperatives are embedding green finance and ESG criteria into their operations as a means to ensure measurable local and systemic impact. And what might other credit unions learn from this?
Oh, thanks for the question again. We do believe that the cooperatives in Brazil are moving forward to really move from awareness of ESG principles to embedding them in their strategy and cooperations. They are offering credit lines for renewable energy, sustainable agriculture, trying to inspire their members to adopt practice that reduce environmental impact and increase their productivity. So they have many educational and capacity building programs that help members understand and implement these practices, supporting both local resilience and financial literacy of the communities they serve. So the focus on financial education and empowerment plays a key role in promoting financial citizenship. At the same time, integrating ESG and green finance, the Brazilian credit unions build credibility and trust among their members, demonstrating a clear commitment to community values and responsible management. They're always trying to foster a culture of innovation as cooperatives develop new products and services that respond to sustainability challenges in Brazil. Many of them here are investing in data-driven management, allowing them to monitor social, environmental, and financial outcomes to try to replicate those successful initiatives among all other credit unions in Brazil, trying to make better and informed strategic decisions. So by combining credibility, innovation, data-based management, and access to strategic resources, these credit unions in Brazil can link local actions to systemic outcomes. So I think the takeaways is moving from awareness to put ESG principles into this strategy and cooperations, combine these financial educations, capacity buildings, technical support to foster community, and then again, invest in data-driven management to try to replicate and scale up all successful initiatives.
That's a great lesson for all of us about using data to drive our decisions and to scale. And so we're going to kind of pivot to, I think, more of a kind of local community issue here with Vancity, and we know that you are working with Indigenous communities. And Alison, I think, I'm really curious, and we'd love to hear what has been the impact in bringing your services like financial inclusion programs where members live and work.
Yeah, thanks. So reconciliation is a core value for Vancity that we've adopted, and has been part of our work for a long time, but over the past, I'm going to say 3 or so years, I think we've really accelerated it. So we now have a specific Indigenous banking strategy guiding our work. And of course, reconciliation is also incorporated into our people and culture approach, and DIR, et cetera. So, again, like we're sort of really seeking to integrate that across the organization. And it's very deliberate to say it's an Indigenous banking strategy, right? We're talking about the economic empowerment of Indigenous people. And that strategy was developed and guided by deep consultation with Indigenous peoples, particularly in British Columbia and in the areas that we serve. So a few kind of initiatives in that space. So we run a program called Wealth Mindset, and I don't want to say it's a financial education program because it's a financial empowerment program, and it's been developed by and with Indigenous peoples, and it's delivered by Indigenous people to Indigenous people. Okay, so people can reach out, ask for that program to be delivered, and we have facilitators that are trained to do that. And we've had, and you can look it up. So Wealth Mindset is the program. If you want it delivered, you can request for that. And I think what's powerful about it is that it's been developed by the people who are going to receive the program, and it's delivered that way. And I've gone through it. The feedback from it is fantastic. It gets into like, what is wealth for you? What does it mean to you? What is your concept of wealth, and a very broad definition of that? Like, what are your values? And so I would say that some of the impacts of just having people unpack and unlearn quite a bit in terms of how they conceptualize of wealth and what that means, and building wealth. We're also working through how can we best actually serve Indigenous communities with our products and services. So one initiative that we have, we operate a branch in Alert Bay, which is, it's quite remote. And the reason we're there is the local branch was closing, and actually the Namgis Nation and Village of Alert Bay reached out to Vancity to say, would you consider actually being here and providing financial services? And so it's a three-part partnership between the village, the nation, and Vancity to offer the branch and financial services there in order to ensure that community was continuing to be served. Through some of this work, we just recently in September, we were certified with I want to make sure I get the name right here. We were bronze certified by the Partnership Accreditation in Indigenous Relations, which is an initiative of the Canadian Council for Indigenous Business. And so if you're looking to understand how your organization is doing and what else you can do, that's a certification that you can, or like a process that you can go through in order to understand how you can better progress reconciliation for your organization. And so, yeah, we're really leaning in on supporting for Indigenous peoples that financial empowerment, entrepreneurship, and climate-ready affordable housing, because those are the needs that have really been identified. And I can't say anything now, but we have some pretty cool stuff that'll come out early next year.
Little teaser for us. Yeah, no, that's amazing. And so, David, I'm going to tag on to you here with this, because my question for you was, how can credit unions maximize their social purpose to gain trust and transparency with their members, kind of building off of what Alison was speaking about. And so, how can they do that, and what are some of the steps that they should consider?
Well, I think the first step that they should consider is, what is their social purpose, right? And going through that exercise of determining what it is. For UNFCU, we are here to serve those who serve the world. And below that, beneath that, what's underpinning that is empowering them to achieve their financial goals, protecting their financial well-being, but then also promoting environmental and social best practices. We have the initiatives in place to support that purpose, and then it's a matter of communicating it. So we take a variety of steps to make sure that our members know all the good work that we're doing, including the impact report that we publish on an annual basis, as well as responding to the UN Global Compact, which we'd love to see many other credit unions do as well. And then finally, we do a lot of work through our UNFCU Foundation that really goes out into the communities in which we do business, operate in, and where our members are to improve the lives of people all around the world.
Yeah, that's amazing. And so, Simeon, I want to turn to you because I know probably there are folks in the room and online who are wondering the answer to this question. So give us your wisdom. How can smaller to mid-sized credit unions overcome budget and staffing limitations to take on sustainability programs?
Well, I hope I can share whatever wisdom I have on this topic. That's a big ask. I think budget's always a concern, right? There's always limited resources for any work, but particularly I think for too long, ESG or sustainability or community impact has been thought of generally in the business world, not so much with credit unions, but still sometimes with credit unions as the add-on or what happens after. And I think I can speak to a couple things we're doing at American Eagle that I think I see in many of the small credit unions around the country and then around the world, which is to make it how you do business as much as possible, right? Embed it in the products and services, embed it in the way that you're communicating to your members, being observant of their needs and speaking to those needs first. We all live in an environment, we all live in a society, and the finance is stacked on top of all of that, right? It's not the other way around. And I think that the more we as leaders in credit unions can acknowledge that and speak to that, the more that the hierarchy of those things, environment, society, and the economy will be stacked in the right direction. I'll say in terms of just tips and tricks around budget, try to beg, borrow, or steal pieces of everybody's time throughout the entire organization, right? If you've got branch managers who are out there doing the work of managing a branch, talk to them, understand, bring them into a group, say, okay, how are we going to bring us into the community? How are you going to be part of learning what the community needs? How are we going to connect everybody in the organization to the work of community engagement, to the work of sustainability, to the work of being a relevant partner in finance for our communities? I'll also say partnership is another strong way that we do it here. We've launched a community impact council where we're looking to our nonprofit and state partners to come in and be part of our development as we're leaning into our sustainability journey, particularly at this point from a social sustainability lens, and build their excitement, show them that you are committed and that you're going to be there with them. So continuing to attract people to that cause as much as possible through, invitation, participation, and communication. Beyond the, engaging everybody through the organization's sustainability, I would say make it real for the people within your organization. We're doing a pilot project with our team members to help them achieve their financial freedom by working with a cohort right now to go through the process of helping bring up knowledge as well as bring up the mindset and capability to manage their own situation and knowledge, as well as give them some tools and extra resources and supports to help whatever their individual situation may be. And we've done a measurement on the intake on what their knowledge and mindset is, and we're going to do the same thing on the outside. So that's a long way of saying walk the walk and bring it through to everybody you can.
That's great advice. Thank you so much. And I want to pause my questions to see if we have any audience questions. Otherwise, I have more questions. Okay. Nothing yet. Okay. All right. Well, Rodrigo, I'm going to turn back to you because you touched briefly as you were introducing yourself about the HICIP framework and how it enables credit unions in Brazil to identify, recognize, and scale sustainable innovation practices, linking local action to long-term ESG impact. And I wondered if you would like to share more about that program with us.
Of course. Thanks for asking again. Well, we work with credit unions and help them map, reflect on, and structure their innovation practices to focus on how they organize, develop, and scale these initiatives, making sure there's a social impact on the communities they serve on. So what we do this annually, and they use a comprehensive framework that they measure the efforts in 5 dimensions. So, and there's the 5 dimensions are participatory innovation, and the focus here is to make sure that the credit unions are engaging and including members in every decision making. There's a collaborative dimension, and the goal is to foster intercooperation and partnership with the public and private sector to maximize social impact. There's a capacity building dimension, and the question is how to better develop skills and knowledge for sustainable innovation. And we have ESG dimension and the green finance dimension, and try to come with solutions to integrate environmental, social, and governance practice. So we do this with 120, 150 credit unions in Brazil, depending on the year. And there's a very good case in Brazil. It's a credit union called Sicredi Conexão. They have been using this as a framework to map all the initiatives connecting the members, communities, and the environment. They have this huge and very impactful project that support family farmers, offering them guidance and financing products for sustainable agriculture, including how to increase their productivity, how to protect the soil and water, and how to generate better income, bigger income. So by participating in Recipe, all the credit unions, they gain a deep insight into the innovation management they do, and how to structure, scale, and replicate these initiatives. So that's what we've been doing with the direct action with the regulator here in Brazil, the Central Bank of Brazil. So that's a broader vision.
That's so impressive. And I'd love to have a whole separate conversation about sustainable agriculture, but we don't have time for that today. Do we have any questions?
And I think this is the last question we can have for this panel.
Okay.
So online it says, I think that's for Vancity. It says, what is the interest rate difference between the cash back mortgage and your lowest available rate? And how much more will that cost me over the term compared to the cash I'm receiving?
Oh, that's very specific.
There's math involved
Very
here.
specific.
So the mortgage is the mortgage. You get a cash back as like a bonus, right? For bringing the mortgage. It's tiered. You can look it up on our site. It's based on the size of the mortgage. It doesn't actually change the pricing of your mortgage. That's based on different calculation. Again, sort of it's tiered, and then there's kind of those two bonuses that I talked about. If you're a first-time home buyer, there's a little bit more cash back for you, and if you are bringing us a low-emission home, there's a cashback bonus as well, and it comes in. It's the equivalent of $1,500 on your Enviro visa. Yes, we have an Enviro visa too. Anyway, all of it's on the website. I'm not going to do any math for you up here on stage.
That's kind of an offstage kind of situation. I do want to just take a moment to thank all of our panelists today. Simeon and Rodrigoh, thank you for joining us online. And David and Alison, thanks for being here in person with us. And thanks to all of you for being part of this conversation today.